I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward to what might happen in coming weeks. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market's upsurge continued early last week, then paused without giving up much ground until Friday. Monday and Tuesday, we saw the techs lead on the upside, and also retail stocks pushed up quite strongly. For the techs, Apple got an upgrade, and it got pushed up to a recovery high. And a lot of retail earnings came out, and even if they were bad, the stocks which have been beaten up attracted buyers, because the buyers think the markets are going up. But huge action was really in meme stocks. And again, it was this time Bed Bath & Beyond, which was a monster. 2 weeks ago, from less than $6 a share, it moved up to $30 a share this week as the shorts got absolutely hammered and the speculators poured in. This company has a completely failed business model, giving 20% off forever. The company's expected to lose $6 next year. And it just shows you that we're in this crazy speculative bubble in the stock market, which are hooking the bulls again, just like they did at the end of last year with the big speculation in meme stocks. And now we have something like Bed Bath & Beyond going from 6 to 30, and now today back down to 10, as the GameStop chairman, who had a big holdings in the company, something like 11%, filed to sell all of his holdings, which he did, of which the top price, I think, was over $29, in some kind of wild irony that he was in there and made all that money, the GameStop chairman. Wednesday, stocks began to move to the downside, at least got a little bit sloppy. News came out on the UK, and their annual change in the CPI was up at a 10.1% rate. This is just an example of the huge trouble that's in the UK and in the Eurozone. With very high inflation. You think inflation is going away around the world? Well, it is not. I mean, essentially, they pay the high price for negative interest rates they had for all of those years, plus a big energy squeeze in the Eurozone, and clearly a failure in their green agenda, as they had to go to coal burning in order to meet their energy needs. And I'll show you later in the show, I think the Eurozone stocks and China are going to lead the next leg down in this bear market. FOMC minutes came out, and they said that they want to keep rates going up, but maybe at a slower pace. They said they need to be restrictive and stay restrictive for some period of time. And their balance sheet will be shrinking now at 2 times the rate as it was scheduled to be starting in September. The markets read this, or the traders read this as, okay, a slower pace for raising interest rates. We're going to be in a period of interest rates getting cut pretty soon. That is such a bunch of garbage. If you remember that inflation, which was at 1.7% for years, the Fed, they went to a zero interest rate policy. 13 years, basically, they were there, except for a blip in 2018. The result of that is where we are right now with a massive inflation rate. Add that to their huge amount of spending and money printing, and that's where we are right now. And they're right now they have to go back. They have to fix this. So it could be that rates are going 3.5%, 4% from 2.5% right now, well into 24 or 25. They're going to stay there. They're going to get up there and stay there and squeeze this inflation out of the system. And if you listen to the Fed heads coming out this week, they were really, after the Fed minutes, coming out with some very tough talk. They don't want the markets to think that there is anything coming in the way of easing anywhere anytime soon. They are desperate to fix this problem that they created. Thursday, housing starts, well, they're crashing. Month over month, they fell 5.9%. Year over year, down 20.2%. And since January of this year, housing starts down 25.9%. This is actually a faster decline than after the mortgage bubble that happened in 2006, 2007. Right now, we have prices still rising, though the last month had a pullback, and mortgage rates going up. So home affordability right now is at a level that is worse than it was during the mortgage bubble. Can you imagine that? Well, this is the start of a huge housing recession right now. I think those housing stocks, which had big bounces, are going to get cut in half. And thank you again, Fed, for creating the buying panic in houses in 2021. The result of that is going to be a major pullback in prices, and that the average person out there that owned a home, bought a home, was feeling rich from the value of their home, is going to feel the negative wealth effect as those prices come down and as the inventories begin to really build out there in the housing industry. So stocks, they held up basically until Friday morning. But then focus came on worldwide tightness that's necessary in the central banks because they have to fight this huge inflation that's out there, and the market turned down. The world markets turned down. S&P 500 now, as I'm recording this right around midday, down around 50 points. The Russell's worse, down about 2%, as those zombie companies have to borrow more money and interest rates are spiking today. And a decent sized bounce that came in the stock market. Well, now the sellers are coming back. The central banks essentially have set up another debacle. The Fed has to get back their credibility. And Powell himself, says he doesn't want to be another Arthur Burns and have to turn it over to another Paul Volcker to get the inflation out of the system. They are going to stay tight, and they're going to stay there for a long period of time. The stock market, their huge rebound, really, we saw something like 18%. That made it over the 50% retracement in the S&P 500. We talked about the possibility of this happening as we compared other bear markets, and our analysis showed the rebound would probably come into mid to late August and then move down. Our VIX analysis that we have now out on YouTube showed that we thought that the bottom in implied volatilities would be sometime in mid to late August, that then we would get an up move in implied volatilities, which then matched the next down move coming in the stock market. The upside that we've had here, much like other bear markets, and we think that the upside mostly is over. You could get another little attempt on the upside, but basically you've convinced the bulls that the worst is over for the stock market, and they're hooked again. The valuations is something you have to be concerned with. And let's take a look here at that Buffett indicator. As we look way back, what I want you to see is that this is the mean value right over here, something like 80-something% of GDP. And all of this time through the 70s and 80s and 90s, it was below that mean value. Through this bubble over here, the tech bubble, it got up considerably to about 1.4 to something. This was 1.20 something percent of GDP in 2007. We got up to 200% of GDP here, and now at August 19th, We're at 173% of GDP. This is still incredible overvaluation. To get back normalized, the stock market could give back 30-40% of its value right now. I'm not necessarily saying this bear market is going to be to that extent, but I want you to see the massive overvaluation that still exists. You had this improvement in here, what got down to 150 something, now up to 170 something percent of GDP. This is massive overvaluation, and there is still a lot of corrective period coming, and the Fed knows this. They know that the stock market is considerably high, and they're going to let it move down. You think that because the stock market falls, they're going to bail on trying to kill this inflation? That is not happening. There is lots of bear market ahead. The shape of that may change a little bit from what our analysis was, and I'll show you that towards the end of the show. But again, I think the Eurozone and China are going to lead the next big leg down for the stock market. For the week, indexes down just over 1% to over 2%. The Russell is the worst, as those zombie stocks now are pulling back because they have to really borrow money at higher prices. Bond market moves down. It's moving down over 2 points on the week for the 30 years. And the 10 years yields are up about 12 basis points. And these patterns are becoming very worrisome. While there was a rebound going in the bond market, and we saw that, and we timed that one really well, now there is indications of some short-term breakdowns that could indicate that interest rates may actually be entering a new period of an upward spike. The gold market really feeling this decline, this rally in interest rates and decline in the markets as it moves down some over 50 points on the week as interest rates move up. And the dollar moves up again. We had targeted the dollar for over 108, and now it's gotten there. Silver slammed down 85 cents. It had a good rebound also. We think that gold and silver are in a bottoming process right now, and coming next week for our members will be a big picture in the gold and silver market. The dollar, it soared over 2% on the week as it got over that 108 number, and now it could make it over 110 based on the pattern that we're seeing in here. Note that the Bitcoin market is getting slammed now, down 9% on the day, down $2,100, and I'm going to take a special look at that in a few minutes. And the oil market down about $1. It was worse today. It looked like it was worse, and then it started to rebound back. We think that a bottoming process is happening also in the oil market, and when these markets like gold and silver and oil get a little bit of a reprieve from the declining equities, we think that they will probably be moving to the upside again. Make sure you watch Future Speak, which is for our members, level 2, 3, and 4. But we are also making that available to our Popular Services Preview members. That's a free trial, which I'll tell you about in a little bit. You'll be able to see Future Speak this coming week with no credit card necessary. So please do consider, if you're not a member now, to become a free Popular Services Preview member here at askSlim.com. Just go to the top of the website. Coming up, Ari's going to give you a preview of our stock sectors, looking at oil and natural gas, and he's going to do multiple time frame analysis in Shell, which can give you a positive setup in there. Katie, she is again showing her new segment, fantastic work, trade planning with options, where she combines the cycle analysis with option strategies. And looking at a positive setup in like crude. And I'm going to give you this picture of this short-term breakdown in Bitcoin and why crypto may be entering a dangerous period. And also, I'll take you to the 1 to 3 month view of SPY and the European market. And I'm also going to show you China, also the FXI, because I think that Europe and China could lead the next leg down in this bear market. Yes, bear market. If you're new to askSlim, please do take advantage of our free preview going on right now, which you'll be able to see 10 of our great areas on our website and content that we share for absolutely free. And I'll show you some details on that in a few minutes. On YouTube, please do subscribe to our channel. Click the notification bell. You know when we post videos. And like this video, give us a thumbs up. That does help us. On Twitter, follow us at askSlim. For questions on our membership info and anything else that we offer, please write to Matt at askSlim.com. All right, this is a member video preview. Arvi does fantastic videos and shows his analysis. And this week it was stock sectors for our members, and he has a positive setup that he's going to show you in Shell. So I think you're going to enjoy that analysis. Show him that, Arvi.
So this is Shell. Just as a heads up, we do have a long side trade in this name. This is acting quite nicely. What you'll note right away is that this has formed a higher cycle low versus that old low, and this is not anywhere near currently that old low. So this is really leading oil, and that is something that you'll see as a theme in many of the names we have highlighted here in this video. Right now, higher cycle highs, higher cycle lows in place here in Shell. Given that this did look at the 78.6 at around 55.5, we are just looking for a move to the 78.6 on the upside around 58, and that's what our overall weekly target is over the next 3 to 8 weeks. If we shift over to the daily, again, we are in a very swamped cycle here where we've used up almost this whole cycle rallying. It leaves a short window of time for a pullback, and then we look for a move to new swing highs in this next short-term rising phase. That's what the highest odds are. On the downside, that comes in from 51.77 to around 50.28. We don't want to see it below the minor 78.6 at 49.11. Levels on the upside come in at the intermediate 61.8 at around 55.25. We have a 78.6 up here at right around 58.13 or so in Shell.
All right, that was great work. Thanks for that. Now coming, trade planning with options, looking at light crude. This is Katie's great new segment where she's going to show you about putting on a bull put spread in the light crude market. And I think you're going to enjoy that, as she also illustrates using the Tastyworks platform.
Hi, I'm Katie with askSlim, and this is Trade Planning with Options for August 18th, 2022. The first trade idea we're going to cover is for an opportunity that may be setting up in crude oil futures. Let's take a look at that chart, /CL. This is a 5-year weekly chart, and you'll notice that we are in this weekly cycle timing window for this second minor third cycle. We have been moving steadily lower, and this week we bounced off that 61.8% fib level at about $85. So we are looking for crude oil to make this minor cycle low and then to begin to move up into the rising phase of this next minor cycle. Now, because this cycle that we're in is negatively configured, meaning it ends lower than where it began, we do not expect crude to be able to make a new high. We're projecting up into this resistance zone that runs from about 103 on the lower end to about 111 on the top. No sign of the bottom in here yet, and momentum is negative as shown with our proprietary momentum indicator, the Reversal Scout. Switching over to the daily chart, this is a 2-year daily, and you'll notice that we are also in a timing window on this time frame when we expect the current daily cycle to make its low and begin to move up into the rising phase of this next cycle. Now that timing window runs through August 23rd. We may have formed our cycle low right here. Today we are getting a nice bullish candle, but momentum on this daily chart is still negative, both a negative reversal scout as well as a negative slim ribbon, which colors the candles green, gray, or red, depending on momentum conditions. Now, based on cycle phasing, we are going to be looking at a bullish trade idea in crude oil futures, but we would like to see momentum turn positive. Over on this 2-hour chart of crude oil futures, we have bullish momentum with both the reversal scout as well as the slim ribbon. So on the daily and weekly charts, crude oil has some work to do, and the best time to enter a bullish trade would be on a pullback after we have established positive momentum. So let's talk about some price levels. Over on the weekly chart, we've bounced off that major 61.8% fib at about $85. And on the daily chart, our next level on the downside is the top of this target zone at about 83.5. That is the 78.6% fib extension level. Let's go over to the Tastyworks platform and I'll demonstrate setting up a simple short put spread in crude oil futures. So here are the expiration cycles, and you can see that we have implied volatility in here anywhere from 50% up to 63.1% in the various cycles, with an IV rank of 31. I'm going to choose the September 15th expiration, which is the last expiration cycle before the roll. And that gives us 28 days to expiration, which fits our analysis because we're looking for a move up now into the rising phase of that next cycle on both the weekly and daily charts. So a short put spread involves selling an out-of-the-money put and also buying a further out-of-the-money put to define your risk. Now, as far as which strike to sell, let's think back about our levels. The major 61.8% fib was at about $85. So let's sell that strike, and then let's buy the 84 strike to define our risk. What we want to have happen is for crude oil to stay above that $85 level and for time to just tick away so that these options lose their value and then we can buy them back for less than we sold them for. Now, a move to the upside will help that process along, and so would a vol contraction, which can occur with upside moves. So the notional in crude oil futures is 1,000. So we take our credit collected and multiply by 1,000 to see our max profit. So in this case, max profit is $320. And the width between our strikes is $1. So multiplying that by 1,000 means that this spread is worth $1,000. With a max profit of $320, our max loss then is $680. Now, of course, you can make the spread wider if you want to collect more, and that will also increase your risk. You can make the spread narrower if you want to reduce your risk, but you'll also collect less credit. And of course, you can move the entire thing closer to the money or further away to make it more aggressive or more conservative. I'll post an option strategy trade sheet on the website as well as on the Discord server with some additional strategies that would be appropriate based on the analysis.
Love that, Katie. Just absolutely love putting all of that work together and then showing option strategies. And Katie will be posting more than just this one strategy, as she said, in our Discord channels for our members. So you'll be able to get a much wider perspective of what type of strategic approaches you could put on for a trade like this. So just absolutely great work. All right, this is a quick update on Bitcoin. Here on Friday the 19th, there's a big down day. Bitcoin is down about $2,000, trading at $21,350 as I do this recording, and that's down 8.5% on the day. Well, nobody can explain why it's going down other than the fact that, well, equity markets are getting hit pretty hard today, and interest rates are going up quickly today. So those things are affecting Bitcoin, which of course is extremely speculative and really depends on liquidity, which is being taken out of the markets now all around the world. So Bitcoin gets a pretty big decline. I want to show you those charts. There's something very important now, is there is a short-term breakdown. So let's look at the Bitcoin chart right here, and we're going to look at both the weekly and the daily. I'm going to start on the daily first. So the left side is a weekly, the right side is a daily. This has our cycle analysis on there, and this is the daily chart. So what I want you to see is something very important, and that is that there are minor cycles in there, and there are dominant cycles, the bigger ones. And this green one you see right in there is Ethereum. And we have that overlaid on the Bitcoin chart. Now, there is an important period in here where there's a nesting, where there's this downward movement here on the Bitcoin chart and Ethereum, which comes out into September, and then another one out over here into late October. Now, this is what's key, is that this minor cycle right over here, which was quite positive, and you had good upward momentum here on the slim ribbon, and you can see the slim ribbon PO, as we call it, was green and positive. Then you made the low here as you were supposed to and began to rally. It hit resistance and then came and broke down, and it got below this level. What that does is it sets up the highest probability, as it got below that 22,475 number, that it was going to be in this declining mode right now, which takes you out into that period in early September. So the next 3 weeks show a lot of risk right now, and that certainly could get Bitcoin down to that support area of 18,525, or even worse than that. So this is a period of risk that we see in here. And if you look at these charts, when you get into those periods where there's a lot of nesting, is where you get these declines. You actually had one over here also where you had a pretty sharp decline. So when I look at the weekly chart and how that sets up, here are your weekly cycle patterns. And you can see that Bitcoin essentially got into this sell zone right over here and then turned down. It hit this major 23.6% right at the point where also you were at the intermediate 50% right in the middle there, and then it came down very sharply, and it got into these minor support areas. So this whole period over here out into October and even into November is a period of some significant risk. And the fact that you're getting that breakdown in the short-term pattern says that this rally that got up over here over 25,000, which we thought could have actually got into the 27,000s, now has failed. And there is a much stronger likelihood of a sharp decline in this period out into October than the originally had thought. We thought it would come a little bit later than that. Our target for this period at the end of October was 18,000, with a possibility of crashing all the way down to 12,000, and that possibility still exists in here. With the period in here, very risky. So with that breakdown we just showed you on the daily chart, let's go back there. That is suggestive of a lot of risk in here going out into both late September, or September, between these two blue lines right over here, and all the way out here to this October period on that next cycle. So lots of risk right now. This is a bad pattern in the Bitcoin market, and you really have to consider that if you were looking for upside in here, that very well could be over. That's it for this quick update on Bitcoin. All right, we're going to look at the stock market. We'll look at the European market, we'll look at the Chinese market, and the SPY. And we're going to get a view of the intermediate 1 to 3 months. And you'll, I think, get a good handle on what we think is going to happen in these equity markets here in the U.S. and around the world. But first, don't scroll forward. This is important to see. Here we are in literally our final week. This is only going to run through next weekend. our popular services preview. And you can sign up right now in this final week. And you can see free. That means no credit card is required. You're going to get all the things on this page for nothing, for free. You'll be able to get a real good sense for the work that we do. If you've already subscribed to the Popular Services Preview, pop us a note. Let us know how you like it, or what you would like to see more of, or what questions you might have. You can write those to Matt at askSlim.com. You're going to get our daily stock index report. That's a snapshot on the S&P 500, NASDAQ, and the Russell. Very extensive. Our SIR Intraday live stream, where you look at all three of those indexes on 15-minute charts with our proprietary analysis and momentum indicator. Get on the right side of those moves. That's the whole key. Our S&P 500 multiple time frame chart stream. That's a live broadcast at 4 different time frames with our proprietary indicators on there. You'll get our trade ideas, which RV and Katie work on, and they do just fantastic work. You'll be able to get in there and you'll see the amazing high percentage on the directional decisions that we make in there when we say it's bullish or bearish. Really phenomenal high rate of being correct in those directions. Future Speak, well, that's RV does a phenomenal job. I do the all of the analysis on 24 different futures contracts and indexes. Hand that over to RV. He reviews it and then presents it to you in the Future Speak show. You'll get our Slimulator Bull and Bear ranking system on the top 84 symbols out there that you could possibly trade. Slimulator Momentum Tracker for the longer term holders, looking at 3 to 6 month outlook in there. Our ever expanding Discord community server with tons of stuff on there where we support our members. Our new cycle low timing tracker, phenomenal work by Katie, and our new futures and equities and ETF hubs, where we bring all of our analysis together in one location for you to just easily have availability to. So sign up at askSlim.com, top of the page. And if you have any questions, write to Matt at askSlim.com. All right, let's talk about the stock market. It had a huge rebound. When you talk about the S&P 500 getting up over a 50% retracement, now I want to note that the NASDAQ and the Russell lagged. They didn't quite do as well. But the European markets and the Chinese market lagged significantly, and those are in a lot of trouble. And I'm going to show that to you before I get into the SPY analysis. Now, our SPY analysis is respective of the fact that there was a lot of strength here. So there's a little bit of an update in there as an alternative, which we want to do. We're very agnostic, and we listen to what the market says to us. So we're going to look at that. And for those people that look at it and say, okay, Slim has gotten bullish, not the case. It's just a little different shape to what I think is going to be a bear market, and potentially an extended bear market as we set out into 2023. So we're going to look at that. But let's first look at the FEZ. This is the weekly analysis in FEZ. This is the Euro Stoxx 50. Which shows you the 50 different blue chips in this index from 11 different countries. Now, this pattern actually is similar to what we have here in the United States, though the peak in here was made earlier than it was made in the U.S. The U.S. it was made out over here, where over here it was made some months earlier. Excuse me, I still have a COVID cough. So what you're looking at are cycle brackets on the bottom. These are not cycles. These are simply a drawing tool representative of the energetic movement in the market, essentially money flows. And off of you get messages off of the different time frames in here, and we do multiple time frame analysis. So you can see in here this big strong cycle as it rallied strongly and came down to support. And when you have this bullish configuration and translation that we see in here, that says you're going to continue on the upside. And you had a similar one or stronger right in here, as you could see. But then you made this double top. And once it broke under this level, it warned that a major top was in place. Now, each time you get into these areas of nesting is where the corrections come. That's where there is the biggest downside risk. So you see that right over here. This, of course, was the pandemic break. This right over here, this one here. These are these areas, and this one right over here. And now look what we are. Now I'm going to take a little closer look right there. And you can see here, looking at the FEZ, the big blue chip stocks out of the Eurozone, that each of these minor cycles, when you got a rally into those rally periods, you had these bear flags. They failed in resistance, as you could see there. And then once it broke the bear flag, it got into a big sell-off period. Even in this one over here, bear flag, big sell-off. That's this one here. Bear flag, the nested one here, where two of them come down together, and the big decline. And you can see that's where we're coming up to right over here. And that is about to break that bear flag. And then get into this period of decline, of correction, where we're in this biggest period of risk right over here, like we were here. This times into late September, into late October, right there is where that bottom is. And it's extremely likely that it's going to break that low. That low is the same place that the United States market made its low. Question is, the U.S. market, which rallied much more, will it make the low in this next down wave? Or will that come later? So you could see in here that the rally did not even make it to the major 38.2, where in the S&P 500, it made it above the major 50. So that's key. It shows you all of the weakness here in the European markets. They have huge trouble, big recession, that they have interest rates that have to go up to fight this high inflation, and at the same time they're in an energy crunch. It's like the perfect storm, that cliche, where markets are very likely to get hit in a very big way. There's no saving this. They can't possibly lower interest rates to save this because they have this huge inflation problem. These central banks put themselves into a huge problem. And now they have to let the markets fall so they can deal with the inflation problem. And this, you can see, very likely to get below here. There's a pretty good potential this gets below the $30 number here in this period in October, November. It's important to think about this timing in here because that's when the next low will likely come, the trough, as we say in these nested cycles there. And it's very likely that we're going to see some sharp declines. The question is, can that happen without affecting the U.S. market? Very unlikely. Let's take a look at China, which is in a recession. They are actually trying to stimulate a little bit in there because between their COVID lockdowns and worldwide recession problems, they are in a lot of problem. And you can see in here the beautiful cyclicality also. In each of those yellow zones right in there where you got the corrections, like here and here and here. And here's one coming here. Now this is out over here, October into November, where this is likely to keep coming down. Now, this has fallen below the 78.6. Momentum in here is negative. And this is where the important support levels are, 2770. This panic low around 26 right over there, and it's going to take those out. Probably get down over here and hit that 24 level, or get down into that fib target zone that you can see right in there, which is below the 22 level. So a ton of risk out over here into October, November, where we're likely to see the Chinese market get absolutely slammed. So that's two of the, that's such a big portion of the world that we're looking at, China and Europe. Europe, of course, we're also considering the UK. This is a very, very bad picture when we look at that. So now let's switch over to SPY. SPY is a little bit better picture because it had a bigger rally and actually got up through that 50% level. So here is the major 50 right over here, and here's the 61.8. And if we would have closed through there, we got a number there that's a bit of a warning to us that things are maybe changing a little. Well, we're not sure how much they changed. And here in these periods, there are cycles coming down here into September, and then shorter term cycles out into October, which line up with the Eurozone and China, Our original analysis suggested that it would come down and take out this low that it made over here. With it getting up here and getting close to the 61.8, I want to respect that and say that there's a possibility that during this period where the whole world of equities declines, that maybe that only gets down into the supports down over here. That would be under 400 in the S&P 500. And the SPY. And then when all of those make a low, you get another rally out over here. But again, this is just extending the bear market, which very likely goes well out into 2023. So to us, it's just a matter of, is the shape that it plunges in here, then rallies and then falls again out into 23, or does it only get down here to somewhere in these supports, then has another rally out over here into towards the end of the year. All along, we thought the Q4 was going to be positive for the stock market, which would be a rebounding period. We said that in the beginning of the year. And then turn down again. All of this, in our opinion, is just big bear market action. It doesn't matter if it declines here and if it hits support and tries to rally again. It's just very likely to extend out well into 2023. So this is a 1 to 3 month analysis that we're looking at, and our 1 to 3 month analysis for the worldwide markets is that it will have a decline here into September through potentially late October. That would align with all of the world markets. And then after that, maybe have a good November and December rebound in there. But the risks are very high right now. We talked about our short-term analysis being such that the rally would likely continue up into mid to late August. We have done that. We're now failing from these resistance areas. We have world markets in very bad shape, and we have the economies such that they are crippled by the high inflation that the central banks created, that the government's spending all that money created, and now they have to correct that. And they're going to get control of it to get their credibility back, and interest rates are going up, and they're going to stay high for a long period of time because they want to make sure they squeeze all that inflation out of the economies if they can do so. And that's going to be a lot of work by them. There is not going to be a rate cutting period at all, maybe not through 2023 at all. So the world is going to deal with higher interest rates that become restrictive and stay there for a long enough period of time. So for the next several months, we'll be looking for markets pulling back, potentially not making a new low in the SPY because the U.S. market is stronger than the other world markets, and then a more favorable November, December, all of that existing within a longer-term bear market. That's what we see. I hope you found that extremely valuable. Don't forget, sign up for our popular services preview, which you'll be able to get great stuff for free with no credit card through next weekend. On YouTube, subscribe to our channel, click the notification bell. Like this video, give it a thumbs up, and watch some of our member videos in the playlists and past shows. On Twitter, follow us at askSlim, and any questions that you have about our services, our memberships, any of that, huge education and support for traders and investors, please write to Matt at askSlim.com. I want you to be so careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to sit